Something big is happening behind the scenes of the global economy. It's not happening in the stock market or in Silicon Valley. It's happening in the vaults beneath Beijing, Shanghai, and deep inside the People's Bank of China. China is quietly buying massive amounts of gold, and not just for decoration or jewelry. They're doing it with purpose, with patience, and with one goal in mind: to change the balance of power in the global financial system. While most people are focused on wars, elections, and markets, China is playing a much longer game, a game that could reshape the way the world stores value, trades currency, and measures power itself. For years, China has been steadily increasing its gold reserves. Officially, the People's Bank of China now holds around 2,300 tons of gold, the sixth largest in the world. But that's just the official number. Analysts believe the real amount could be much higher, possibly hidden in state-run funds or military stockpiles that never show up in public data. And the way they buy is deliberate, quiet, and consistent. Month after month, for nearly a year straight, China has reported new gold purchases. Never in huge spikes that might shake the market, but in small, steady increments. This isn't random, it's a strategy. A slow build-up that avoids attention, but changes everything over time. To understand why China is doing this, you have to understand how the world really works. For decades, the global financial system has been built on one thing: the US dollar. The dollar is the world's reserve currency. Every country needs it to trade, to buy oil, and to pay debts. But that dominance gives Washington enormous power. If the US doesn't like what a country is doing, it can freeze assets, block transactions, or cut them off from the dollar system entirely. China has watched that happen to Iran, to Russia, and even in smaller disputes with its own banks. The logic is simple. If you want real independence, you can't depend on the dollar, and gold is the oldest form of independence there is. Gold doesn't care about sanctions. It doesn't need approval from Wall Street or permission from anyone. It can be stored, moved, and valued anywhere on Earth. That's why China's gold buying isn't just about holding reserves. It's about building a financial system that can survive without the dollar. They call it de-dollarization. It's a trend spreading across Asia, the Middle East, and even parts of Europe, and China is leading the charge. Every bar of gold they buy makes the yuan a little stronger. Every ton stored in their vaults makes them a little less vulnerable to US control. This isn't just economics, it's monetary warfare, fought not with missiles but with metal. And for thousands of years, gold has been the ultimate measure of wealth. Empires rose and fell based on who controlled it. The Romans used it to rule trade, the British built an empire on it, and the United States followed the same playbook in the 20th century. But in 1971, President Nixon cut the dollar off from gold. From that moment on, money became trust, not metal. The dollar worked because people believed in it. But belief can change. By hoarding gold, Beijing is preparing for a world where belief in the dollar starts to fade. And history shows that every paper money system eventually does. Right now, gold makes up about 5 to 7% of China's total reserves. That might not sound like much, but it's rising fast. In 2015, gold was barely 2% of their reserves. Go back to the early 2000s, and China had almost none at all. This is a long, methodical build-up. Slow, quiet, then sudden. And while 2,300 tons is huge, it's still less than what China probably wants. Some analysts believe Beijing's real target is closer to 10,000 tons, enough to anchor the yuan as a partially gold-backed currency. If that ever happens, the world's financial map will look completely different. But buying gold is only one part of the plan. The other part is control. Control over the gold market itself. China isn't just a buyer anymore. It's now one of the largest refiners and importers of gold on Earth. It has major hubs in Shanghai, Shenzhen, and Hong Kong. And through the Shanghai Gold Exchange, it's slowly setting its own price benchmarks, separate from London and New York. They're not just stacking gold, they're building a parallel system, a new gold ecosystem that other countries can plug into if they ever want to move away from the dollar. And that's already happening. Central banks from Turkey, India, Saudi Arabia, and even parts of Africa are now buying gold in record amounts, many of them trading directly with China. China sees gold as more than a financial asset. It's a strategic weapon. If tensions rise with the West, or if sanctions hit, gold gives Beijing a backup plan. It's portable, it's universal, and it can settle trade without touching the dollar. And in a world where trust is fading between East and West, between nations and banks, gold is one of the few things everyone still agrees has value. That's why Chinese officials have even floated an idea, a new global gold custodian system, where China itself would hold gold on behalf of other central banks. That would shift part of the world's financial gravity from the US and Europe straight to Beijing. All this gold buying has consequences. Prices have hit record highs, partly because of China's endless demand. Global supply is tightening, and miners can't keep up. Even countries like Poland, Singapore, and Qatar are adding to their reserves, not because they need gold right now, but because they see what China sees coming. A world slowly moving away from the dollar. And the more countries hedge with gold, the faster that shift becomes real. It's a feedback loop, and China is right at the center of it. The bigger picture is this: China wants the yuan to become a true global alternative. It's already used to buy oil from Russia and Iran. It's being tested in trade deals with Brazil, Saudi Arabia, and Africa. But for the yuan to really compete with the dollar, it needs trust. And trust needs backing. Gold provides that backing, not officially, not yet, but symbolically and psychologically. It tells investors that this currency isn't just paper. There's something real behind it. That's why every time China adds gold to its reserves, the yuan gains quiet credibility. Meanwhile, the West faces a strange paradox. For decades, gold was seen as outdated, a relic of the past. Central banks in the US and Europe stopped accumulating it. They trusted markets, bonds, and digital finance instead. But now that trust is cracking. Rising debt, inflation, and global tensions are shaking confidence in paper assets. And suddenly the old metal everyone ignored is shining again. China didn't ignore it. They prepared for this moment. And not all of China's gold is even on the books. Some of it likely sits in state-owned banks, military vaults, or sovereign wealth funds that don't report to the central bank. That means China's true holdings could be thousands of tons higher than what's officially known. And that's intentional. The less the world knows, the more leverage Beijing has. It can reveal or conceal depending on what sends the strongest signal. A move straight out of the financial chess playbook. So where does all this lead? In the short term, it means gold prices will likely stay high. Central banks, especially outside the West, will keep buying. And the dollar's dominance, while still strong, will face slow erosion. In the long run, China's gold buildup could become the backbone of a new kind of global monetary order, one where power isn't measured by how many dollars a country prints, but by how much real wealth it holds. And that, for the first time in decades, puts the East ahead of the West. The question now isn't just how much gold China has, but what they plan to do with it. Will they back the yuan with gold? Will they create a gold-based trade network for the BRICS nations? Or will they simply keep buying until the world has no choice but to take notice? Whatever the answer, one thing is clear. This isn't just about gold. It's about control. Control over money, over trade, and over the story of global power itself. And while the world scrolls through headlines and short-term chaos, China is building something that lasts. Gold doesn't rust, it doesn't default, and it doesn't answer to Washington. Every bar that disappears into a Chinese vault is a quiet statement that the next era of money might look very different from the one we've known. And when that shift finally happens, it won't be sudden. It'll be something that's been happening all along, right beneath our feet.